All right. Well, in the interest of time, I think I'm just going to get us started. Good afternoon. On behalf of the USET Tribal Infrastructure Development Program, I want to welcome everyone to today's webinar on clean energy tax credits and financing. I'm Liz Malerba. I'm a citizen of the Mohegan Tribe, and I'm Director of Policy and Legislative Affairs for the USET Sovereignty Protection Fund here in Washington, D.C. I am going to be your moderator today, and I'm excited to be joined by partners and colleagues from the Department of Energy's Tribal Energy Finance Program and Hobbs, Straus, and Walker. I will introduce them in a few moments, but first I want to just go over a few housekeeping items. All participants on this webinar are currently muted. We are going to be holding questions until the very end of the presentation, at which point you can raise your hand to be called upon. And I will make sure that you are unmuted, as I am also, in addition to being the moderator, controlling all of the technology here, so wish me luck. The webinar is being recorded, which should have been announced to you at the beginning, and the recording as well as the PowerPoint slides will be made available on our website. That's USET Inc., USETinc.org/infrastructure. You can also visit this page to access further information pertinent to tribal nations and infrastructure funding opportunities, as well as sign up for our updates and communications on these issues. So without further ado, I will introduce you to our presenters, key staff for today's webinar. I am joined on the USET side by Melanie Plusinski, who is a citizen of the Bad River Band of Lake Superior, Chippewa, and our recently hired infrastructure policy analyst. So those who continue to participate in our webinars and trainings on this issue will be seeing lots and lots of her. We're very lucky to have her on board. Next, I'll introduce you to Claire Newfeld. She is an associate at Hobbs, Straus, and Walker in the firm's DC office. She earned her JD and a certificate in Indian law from Arizona State University and has previously worked for the Native American Rights Fund and the Senate Committee on Indian Affairs. Also from Hobbs Straus, we are joined by Telly Meyer, who joined the firm in 2023. Telly's legal practice focuses on federal and state tax matters, employee benefit issues, business structuring activities, and the Bank Secrecy Act audits of Indian gaming facilities. He regularly represents tribal nations and their enterprises on a wide array of complex transactions and compliance matters aimed at optimizing tax incomes. And last but not least, we have our illustrious team from the Tribal Energy Finance Program at the Department of Energy. David Sickey is a senior consultant with the Tribal Energy Finance Program. He is a former chairman of the Coushatta Tribe of Louisiana, and he's the Deer Clan and speaks his native language of Coushatta fluently. During 18 consecutive years as a member of tribal government, he focused on restructuring and improving government programs, increasing funding for health, housing, education, culture, elder programs, and expanding economic development. And then finally, the lovely Lisa Garcia Ruiz. She brings to the table, she's also a senior consultant with the Department of Energy Tribal Energy Finance Program. And she brings to the table a rich background in the nonprofit sphere, as well as significant work in Indian country. She has 30 years experience in fundraising, nonprofit management, grant writing, grants management, and most recently, management work in municipal and tribal government. She began her career in her home state of Michigan as a nonprofit executive director and has since worked and consulted for numerous nonprofits and tribes in Southern and Central California. So welcome to all of our speakers today. I am going to begin sharing my screen with you all, and I will ask one of our speakers to help me. Just give me the thumbs up when everything is going the way we want it to be. There. Am I showing a slideshow? All right, but now Claire is in a car again. for the audio issues. We've been trying to figure that out for a little while now. So Claire, I'm actually going to mute you briefly just for the beginning of the presentation. So again, you're here today with us to learn a little bit more about Inflation Reduction Act tax credits and elective pay, as well as other opportunities for tribal energy financing underneath the IRA and in general. So I just want to briefly, before we get into kind of the meat of our presentation today, go over a little bit about our Tribal Infrastructure Development Program and who USET is, in case you're unfamiliar with us. So USET and the USET Sovereignty Protection Fund collectively advocate on behalf of 33 federally recognized tribal nations from the northeastern woodlands down to the Everglades and across the Gulf of Mexico. USET is our 501c3 side of the house that was established in 1969, and it is headquartered in Nashville, Tennessee, delivering programmatic services and supports to our member tribal nations. And then on the 501c4 side is the USET Sovereignty Protection Fund. We're headquartered in Washington, D.C. We're coming up on our 10-year anniversary, and we conduct education and advocacy on behalf of our member tribal nations. But this project that we're engaged in is not just for the benefit of our member tribal nations, but it is a national education and outreach project meant to ensure that all of Indian country benefits from recently enacted infrastructure laws. One of the big pieces of our outreach and education is, of course, in-person trainings and virtual trainings and webinars like today's. But we also have some upcoming some upcoming trainings that we would like to highlight for you all. Next week, we're going to be at the Reservation Economic Summit in Las Vegas, Nevada. And the USET Infrastructure Program will be presenting a breakout session on Thursday, March 14th from 11 to 11:50 not 15 a.m. At RES. And then I also know that DOE will be on site at RES as well. I should also note that we will be hosting a reception on Wednesday evening at RES. And so anybody who is on this webinar and is going to be in attendance at RES is welcome to join us for the reception. If you sign up for our infrastructure mailing list on our website, you will receive information about that reception. We're also planning to be at the 2024 Self-Governance Conference next month. That's in Chandler, Arizona at Gila River, during which we'll be presenting there as well. But we're really looking to cast a wide net here. And so to the extent that you or folks that you know should be engaged with us on these issues, we would love to hear from you. We would love for you to share our information far and wide. Again, this project is not limited to our 33 member tribal nations, but rather is focused on tribal nations across the country and making sure that they have a sense of what is going on with regard to federal infrastructure funding opportunities and also just related issues in the infrastructure space. So generally, our goals for this program, just very briefly, are awareness of how the laws impact tribal nations and what funding is available, making sure tribal nations have optimal access to Inflation Reduction Act and other infrastructure funding, and advocating to make sure that these funds are deployed in ways that work for tribal nations, equity in the distribution of funding between tribal nations and other units of government, and of course with each other, flexibility in the way the funding is deployed to be able to respond to local conditions, and to ensure that the funds, the rules surrounding the funds defer to tribal nation decision making, streamlining in application and reporting processes. I think I think that one is a nut that we're still trying to crack, and I think Claire's presentation will show you just kind of how complicated some of these application processes can get. And then above all, protection for tribal sovereignty, sacred and cultural sites, public health, et cetera, as infrastructure is deployed across the country. So that's just a brief overview of the program. Of course, a brief overview of the Inflation Reduction Act before we get more into the weeds. The Inflation Reduction Act was signed into law by the president in August of 2022. The total price tag in spending is $437 billion, representing, the largest single investment in renewable energy ever. And, and there are a couple of other pieces, reducing healthcare costs and various tax provisions that are unrelated to today's discussion that I won't get into today. Indian country is able to access $720 million, which is a very small proportion of total funding, indirect funding. This includes $75 million for the Tribal Energy Loan Guarantee Program and $20 billion in allowable loan guarantees, which I'll allow my DOE colleagues to get to during their presentations. But of course, tribal nations are eligible for billions more through dozens and dozens of additional federal programs, including tax credits for clean energy projects and first of its kind mechanism for tribal nations and other tax-exempt entities to receive cash payments for tax credits directly, otherwise known as direct or elective pay. So I just wanted to do a little bit of kind of scene setting there. I'm going to turn it over to Claire Newfeld with Hobbs Straus in just a moment. But I also want to touch on a few disclaimer items. Claire can kind of go over those a little bit more deeply. But of course, we do need to let everybody know that what follows is not legal advice. You should be contacting your lawyers directly for that. But what does follow is the best information that we're able to gather and the most up-to-date information that we're able to gather. So I'm going to turn it over to Claire to talk a little bit more about our legal disclaimer and also to provide an overview of direct/elective pay and clean energy tax credits. Claire?
Thank you so much, Liz. And I truly Am I unmuted? Okay.
You're good.
Thank you so much for that, Liz, and I truly apologize for any audio issues. Hopefully I am at least coming through clearly and you can hear me. As Liz said, I'm going to go over a very important disclaimer. This presentation provides an overview of certain Inflation Reduction Act tax credits for general informational purposes only. This is not itself tax guidance. The content in this presentation is based on final, proposed, and temporary regulations, other tax guidance on official agency websites, webinars, and other public information. This slide deck relies on simplifications and generalizations to convey high-level points about the Inflation Reduction Act tax provisions. Please refer to the guidance and regulations issued by the IRS for more detailed information. Finally, I want to mention that the final rule for elective pay was released on March 5th. That was 2 days ago. So this presentation does not comprehensively cover the final rule. We are going to touch on a few high-level points, but we are still in the process of digesting and interpreting this rule, and we will update our outreach in the future as we become more familiar with it and as implementation continues to roll out. Next slide, Liz. Okay, so I'm going to start with elective pay and then we'll move on to tax credits. So what is elective pay? Elective pay, or direct pay, allows tax-exempt and governmental entities that do not owe federal income taxes to receive a cash payment equal to the full value of tax credits they would otherwise qualify for if they paid federal income taxes. And Treasury and the IRS have frequently characterized elective pay as a force multiplier. Eligible entities can use competitive grants and loans to fund qualifying projects up front without reducing the project's cost basis. And elective pay is not a competitive funding opportunity. Rather, any eligible entity that meets the requirements of an underlying tax credit will receive a cash payment from the IRS if the entity follows the elective pay process. Now, I wanted to point this out because elective pay is sometimes described as a functional grant. And while there is truth to that characterization, in Indian country, the word grant often means competing for a small pool of funds. And this is not the case with direct pay. The pool of funds available is not finite, and there is no competition. Applicable entities must still meet several requirements, but if they do, they will receive a cash payment from the IRS. And I also want to emphasize the force multiplier characterization of the elective pay opportunity. Another characteristic of grants is that they're often very restrictive, very siloed, and sometimes can't be combined with other funding opportunities. But elective pay does not have to be siloed. The Inflation Reduction Act is massive and offers funding opportunities that can and should be stacked to maximize the financial benefit of a single project. So elective pay really provides an opportunity for tribes to think big and maximize their investment in these clean energy projects. Next slide, please. So as the slide title indicates, this is not an exhaustive list of eligible entities. I just pulled out the categories that would be of most interest to this audience. Please see the final rule for specific definitions and qualifications. They are very technical, but I will point out some high-level points. So the first category is any organization exempt from the tax imposed by Subtitle A of the Internal Revenue Code. For the purposes of the audience of this webinar, this essentially refers to organizations that are described in sections 501 through 530 of the Internal Revenue Code. That includes the common 501c3 nonprofit, as well as section 528 homeowners associations. The next category is Indian tribal governments. The Inflation Reduction Act uses the List Act definition, which is essentially the recognized governing bodies of Indian tribes identified in the most recent list published by the Department of the Interior in the Federal Register. And a small point, the final rule clarifies that this most recent list is the one prior to the date on which a relevant elective pay election is made. Next slide. Next, agencies, instrumentalities, and subdivisions of Indian tribal governments. The final rule clarifies that eligibility under this category is based on the totality of the circumstances, and the rule states that additional specific guidance is outside the scope of the rule, but entities may request a private letter ruling from the IRS Office of Chief Counsel if they are truly unsure if they meet this category of eligibility. And finally, Alaska Native corporations, as defined by Section 3 of ANCSA. The final rule clarifies that this category applies to consolidated groups with an ANC as a common parent. And I want to note that these slides do not cover entities that may only be eligible for elective pay due to their relationship with an applicable entity, such as disregarded entities like Section 17 corporations and co-ownership arrangements. These issues have not been fully fleshed out in the final rule and are still subject to rulemaking and consultation, which I will discuss briefly later in the presentation. Next slide, please. So what tax credits are available for elective pay? Many, you can see them here on the screen. One that I have highlighted is the low-income communities bonus credit, which I will cover in the second half of this presentation. Next slide. So how does it work? This is a very high-level overview, and I'm going to go into a little bit more depth on some of these points later on in the presentation. But first, identify and pursue the qualifying project or activity, then determine the tax year for which the tax credit will qualify, and this will vary per tax credit opportunity. For many of the clean energy tax credits, it will be the year the energy facility is placed in service. Complete pre-filing registration with the IRS, leaving enough time before the filing deadline for the IRS to provide a registration number for each applicable credit property. The filer will need to provide that registration number on their tax return to make the elective pay election. Satisfy all eligibility requirements for the underlying tax credit and any applicable bonus credits, such as placing the facility into service. And finally, file the required annual tax return, such as a Form 990T if you are a tribal government, by the due date and make a valid elective pay election. Next slide. So rules and guidance. As I mentioned earlier, the final rule for elective pay was released 2 days ago. It is 180 pages, it is very detailed, and yet it still leaves some questions unanswered. As we stated in the disclaimer, this presentation reflects our understanding of the final rule as of now, but we will continue to review the rule and update our outreach. And I also want to note that the final rule does not address the issue of tribally chartered corporations. The IRS has indicated that it will be holding another tribal consultation on this issue before issuing separate regulations. Temporary regulations for pre-filing registration requirements were published in the Federal Register on June 21st. The final rule now supersedes these regulations, but it does implement them in full. However, the final rule does provide some clarifying language to these temporary regulations, so it's important to rely on the final rule and not just go off the temporary regulations because they are no longer in force. Additionally, Treasury and the IRS has released guidance on the effect of domestic content requirements for certain tax credits eligible for elective pay. Public comment closed for these regulations on February 26th. I'm not going to be discussing domestic content requirements in this presentation, but watch for the final rule to be released in the coming months. I've also listed some additional guidance on this slide deck, and as Liz said, we will be posting the presentation, so never fear, you will have access to these links. The frequently asked questions link to the IRS website has been updated with information from the final rule, so that would be a great place to start if you don't want to dive straight into a 180-page document like we did. And there's also a link here to subscribe to IRS news updates for tribal governments. Next slide. So alongside the final rule, the IRS released a notice of proposed rulemaking to provide guidance allowing certain partnerships that are organized exclusively to produce electricity from certain property to take advantage of the elective pay opportunity. The public comment period closes on May 10th, and Treasury is holding a tribal consultation on the notice on April 5th. A Dear Tribal Leader letter was released announcing the consultation, so if you're a tribal leader, make sure you watch out for that. And otherwise, definitely consider attending the consultation and providing comments because this is a very important issue that is not fully addressed in the final rule. Next slide. So I did want to highlight a special rule it was in the proposed regulations. It's now been implemented in the final rule with a little bit of clarification. But basically, the general rule for tax credits provide that when a tax-free grant or forgivable loan is used to fund a qualifying project upfront, the base cost amount is reduced by the amount of the grant or loan for purposes of calculating the tax credit. So here's an example. Let's say that a tax credit applicable project costs $1 million. And the tax credit that this project is eligible for is 20% of the cost basis. Let's also say that the applicable entity that undertook this project received a grant of $100,000, and that grant was tax-free. Under the general rule, the total cost basis would be reduced by the amount of the grant, $100,000, to $900,000, resulting in a tax credit of $180,000, which is $20,000 less than if the total cost of the project were included in the project's base. Next slide. So under the final rule and the proposed rule, if an investment-related credit property is funded by a tax-free grant or forgivable loan, the property's cost basis would not be reduced for the purposes of calculating the tax credit. And this bulleted list represents the tax credits to which this special rule would apply. There is one caveat, though. The amount of the tax credit and the amount of the tax-free grant or forgivable loan cannot exceed the total cost of investment if the grant or loan was received for the specific purpose of obtaining the property. This provision does not apply if the tax-exempt amount is not received for the specific purpose of acquiring the investment credit applicable property, such as if the tax-exempt amount is from the applicable entity's general fund. And there's an example that will illustrate all of this on the next slide. So here's an example from the final rule. Public Charity B receives a $60,000 tax-exempt grant from a private foundation to build energy property P, a qualified investment credit property that costs $80,000. B uses $20,000 of its own funds plus the $60,000 grant to build P. Thus, B's basis in P is $80,000. Based upon acquisition cost, B can earn a Section 48 investment credit with bonus credit amounts of $40,000 or 50% of the cost basis. Thus, the amount of the grant plus the Section 48 credit is $100,000. However, because $100,000 exceeds P's cost by $20,000, B's Section 48 applicable credit is reduced by $20,000 so that the total amount of the Section 48 investment credit plus the grant equals the cost of P. So a very simplified way of saying this is that the special rule cannot be used for profit. At the very least, the applicable entity can break even. I also want to stress that this special rule only applies to those 4 or 5 investment tax credits that were listed on the previous slide. Next slide, please. So pre-filing registration. Eligible entities making an elective pay election must complete pre-filing registration with enough time before the filing deadline for the IRS to provide a registration number for each applicable credit property. And the IRS currently recommends at least 120 days to complete 120 days before the filing deadline for the applicable entity to complete pre-filing registration. On December 22nd, the IRS and Treasury launched the pre-filing registration portal and a user guide with step-by-step instructions. I will note that it is very important to review the instructions before beginning the registration process because only one authorized representative for an entity may complete the registration, and submissions may not be edited until they are either returned with registration numbers or returned with comments explaining why registration numbers were not provided. So it's really important to get the submission right on the first try and to make sure that the person who is completing the registration knows what they're doing. Next slide, please. To assist in the pre-filing registration process, the IRS is offering office hours through Microsoft Teams to help entities navigate the pre-filing registration tool. There's several opportunities to attend these office hours in the coming weeks. And IRS has also been offering these office hours since the early winter. Next slide. So I wanted to address some elective pay frequently asked questions. These are FAQs that have been identified by Treasury. And I will note that USET is working on gathering some tribal-specific FAQs that it will continue to develop and update as additional guidance is released. So the first question, is elective pay worth the upfront risk? What if I unexpectedly run out of funding to complete the project? And the answer is that eligible entities seeking to take advantage of elective pay must be willing to address two primary areas of risk. The first is project completion, or the risk that the entity will fail to put the project into service, and compliance, or the risk that a completed project will not meet all the underlying requirements of the applicable tax credit and any bonus credits. And while these project completion and compliance risks can take substantial resources, they are common risks associated with other forms of federal funding or tax code benefits. For better or for worse, many federal programs rely on beneficiaries being willing to fund a project upfront to receive a benefit after the fact. So that's why USET is pleased to partner with the Department of Energy's Loan Programs Office on this webinar, because they can assist with upfront funding so tribes can take advantage of elective pay on the back end. Next slide. Question 2. If the payment doesn't come until after a project has been put into service, where does the upfront funding come from? The answer is many sources. For investment-related tax credits, funding can come from tax-free grants and forgivable loans, as well as other sources. Remember, investment-related tax credits have that special rule that allows stacking grants and loans with elective pay. For other credits, funding can come from bridge or debt financing. And similar to the point that I just made, elective pay is similar to reimbursement-based federal programs such as FEMA disaster funding. Next slide. Final question. My tribe or tribal organization is very small. How do I know if we have the capacity to implement a tax creditable project? And the answer is that this is a judgment call that all eligible entities will need to make for themselves. Some ways to make things easier are to seek out technical advice and assistance from other entities. USET is really striving to be a leader in outreach to tribal nations on how to really take advantage of these Inflation Reduction Act opportunities, as well as the Department of Energy's Loan Programs Office. Their staff has a wealth of knowledge on how to maximize these financial benefits, and you'll be hearing from them later. Also, pursuing projects with a larger, higher capacity eligible entity as a partner and a leader. But I will caution that this wades into some of those unknown waters regarding co-ownership arrangements. So the IRS and Treasury are still determining how they're going to implement these specific types of arrangements. So proceed with caution and watch out for additional guidance that is forthcoming if you choose to go this route. Next slide.
Yeah, I would just also add very quickly before we transition into the next slide that one of the things that we're advocating for is more direct technical assistance from Treasury on this issue for tribal nations. There were tribal office hours held during the implementation of ARPA, for example, that I think could and should be replicated in this space as well. And we continue to advocate for that with Treasury and with the IRS.
Absolutely. So we're now going to move on to the second half of this presentation, the low-income communities bonus credit, which is codified at section 48(e) of the Internal Revenue Code. So what is it? The low-income communities bonus credit is an allocated bonus credit that provides a 10% or 20% boost on top of the existing 30% energy investment tax credit codified at section 48 of the Internal Revenue Code. So ding, 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 energy investment tax credit. That means that that special rule that I spoke about in the elective pay portion applies to this bonus credit. Next slide. So how does it work? The program will allocate 1.8 gigawatts of capacity each year to solar and wind projects with a maximum output of less than 5 megawatts. Owners of eligible facilities may apply for an allocation of that 1.8 gigawatt capacity limitation, which will be distributed amongst eligible facilities according to the categories in the chart that you see on the screen on the previous slide. There we go. So these categories are Category 1, located in a low-income community, Category 2, located on Indian land, Category 3, qualified low-income residential building project, and Category 4, qualified low-income economic benefit project. All of these categories were specifically defined in the final rule that Treasury released for Section 48(e) on August 10th, 2023. However, the rule provides that the allocations for each category may change from program year to program year. So the numbers that you see in the allocation column of this chart may change in the coming years. I'm not going to go into great detail in this presentation on the different categories due to how technical the definitions are, but I will mention some important points later in the presentation. Next slide. So if the applicant receives a capacity limitation allocation, it has 4 years from the date of receipt of the allocation to place the facility in service. Receipt of an allocation does not guarantee eligibility for the bonus credit. After the facility has been placed in service, the IRS will determine whether the facility is eligible for the bonus credit or disqualified. Once the IRS has completed its review, it will issue an eligibility or disqualification letter. If the IRS issues an eligibility letter, the applicant may claim the bonus credit on their applicable tax filing form or make a direct or elective pay election if applicable. I want to point out a few implications of this process. The first is that the applicant must receive a capacity limitation allocation before the facility is placed in service. In other words, applicants may not apply for an allocation for a facility that it already operates. It must receive an allocation, place the facility in service within 4 years, and then the IRS will evaluate the facility and determine eligibility for the bonus credit. The other implication that I want to point out is that unlike elective pay, where I really emphasize the fact that it is not a competitive funding opportunity, there is a competitive aspect to the low-income community's bonus credit in that applicants must meet certain criteria in order to receive an allocation. Next slide. So as I stated on the previous slide, receipt of a capacity limitation allocation does not guarantee eligibility for the bonus credit. Projects may be disqualified at the placed in service stage for some of the following reasons. The facility location changes. The facility cannot satisfy the financial benefits requirements for Category 3 or Category 4, or for that matter, any of the requirements for the other categories. The facility is not placed in service within 4 years of the allocation award. The facility received an allocation based on meeting the ownership criteria, and the ownership of the facility changes prior to the facility being placed in service, such that the ownership criteria is no longer satisfied. This list is not exhaustive, and there are exceptions to these rules that are discussed in the final rule. The important point to stress here is that it is the applicant's responsibility to ensure continuing compliance with the eligibility requirements of the bonus credit, even after it receives a capacity limitation allocation. Next slide. So I'm going to go over the application process. Applications for program year 2023 closed on February 29th, 2024. Applications for program year 2024 are expected to open in early spring and unlock a new 1.8 gigawatt capacity limitation. The application process for 2023 was as follows. Applications opened on October 19th. Applications submitted within 30 days of the application opening were treated as submitted on the same date and at the same time. In other words, there was no benefit to applying early. At the conclusion of the 30-day period, the Department of Energy received over 46,000 applications, representing more than 8 gigawatts of proposed capacity. Note that this number does not necessarily reflect the number of applications that met the criteria to receive a capacity limitation allocation. Treasury indicated at the time that it may use a lottery to choose between applicants that met similar criteria, and that the IRS may reallocate capacity among the categories to meet demand. Next slide. Applications were accepted on a rolling basis for categories with available capacity until February 29th, and a program capacity dashboard was published showing the total capacity, approved allocations, applications pending allocation, and capacity remaining for each category, with and without additional selection criteria, which is something that I will discuss on the next slide. But I want to emphasize that this is the process for 2023. It may change for the next program year, which is expected to unlock in the next couple of months. Next slide. So in program year 2023, at least 50% of the total capacity allocated to each program category were reserved for applications that met criteria in addition to the basic criteria for each category. There were two types of additional selection criteria: ownership and geographic. Next slide. So an otherwise qualifying project in any category that is owned by any of the entities listed on this slide were eligible for the 50% of total capacity allocated for additional selection criteria. And the important thing I want to point out about the ownership criteria is that it opens up several opportunities for tribal entities to receive a capacity limitation allocation for all four of the categories. Tribes are not limited to the Category 2 located on Indian lands category. A few things to point out: tribal enterprises included Section 3 and Section 17 corporations. The definition of Indian tribal government for purposes of meeting the last bullet point, the qualified tax-exempt entity category, was the List Act definition. And I already said this. There are lots of opportunities under all of these ownership criteria for tribes to have a greater chance of receiving an allocation based on this additional selection criteria. Next slide. So the second type of additional selection criteria was geographic. It did not apply to Category 2 facilities. Indian lands is defined in the Inflation Reduction Act as it is defined in the Energy Policy Act of 2005. The geographic criteria were intended to capture facilities located in areas with the highest energy burdens and the least investment. And the public mapping tool linked on the slide helped to identify areas that met either of the two criteria that are listed on this slide: persistent poverty counties and climate and economic justice screening tool energy category. Next slide. I'm not going to go into great detail on this, but for the sake of completion, in program year 2023, there was an additional sub-reservation for Category 1 facilities. Category 1 is located in a low-income community for residential behind-the-meter facilities, including rooftop solar. Next slide. So this table shows the 4 application categories and how the capacity limitation of 1.8 gigawatts was divided up among projects that met additional selection criteria and projects that did not in program year 2023. So for example, in Category 2, there was a total of 200 megawatts available for allocation. Within that 200 megawatts, at least 50% or 100 megawatts was reserved for projects that met the ownership additional selection criteria. Remember that geographic criteria was not available for Category 2. Next slide. So these are some program resources. Remember that all the information on these slides is from program year 2023, at least for the low-income communities bonus credit portion of this presentation. 2023 was the first time this bonus credit program has been implemented. There will certainly be lessons learned in program year 2024 and potentially some changes. So we can definitely expect some updated guidance. But if you would like to start preparing or would like more information, these resources are a good starting point. And with that, that is the end of my portion of this presentation. I will turn it back over to Liz.
Thank you so much, Claire. That was a lot to digest. And as I said at the outset, we're asking everybody to hold their questions until we get to the end of our presentation. So we appreciate all of Claire's guidance on tax credits. And as she alluded to, you know, there are a lot of ways to finance energy projects prior to placing them into service and receiving direct or elective pay. And one of those is by working with DOE's Tribal Energy Finance Program. And with that, I would like to turn it over to David and Lisa to tell us a little bit more about opportunities that are available under DOE's Loan Programs Office. David and Lisa?
Hi, thank you, Liz. And a special thank you to USET. USET has been around for several decades, and I just want to applaud your leadership and commend you for all your hard work that you put forth. So thank you so much for this, for convening and organizing this event today. Also, thank you to Claire and at Hobbs Straus and my fellow presenters this morning. So thank you very much for this opportunity. Our presentation today is framed around and inspired by an important concept, the power of native energy. This idea is the product of both formal and informal consultation and a lot of thought. There's literal meaning when we're talking about power and energy development. Then there's the more abstract meaning where we talk about how powerful the native energy investment opportunity is and will be in the future. So when we say the power of native energy, we ask you to think about it from two perspectives. When we're talking about investing in tribal energy projects, but what we're really talking about is about investing in tribal sovereignty. The idea that a tribal nation can be in control of their own natural resources, their own energy infrastructures, and can create their own independence when it comes to the power and energy needs. When we reflect on future generations, how that builds on tribal sovereignty, having that independence and having control over your own natural resources. So where did all this money come from? Well, it emanates from the Energy Policy Act of 2005. In 2005, specific provisions were made for tribal nations that included a loan guarantee program to provide a guarantee to private lenders that lend to tribes. In 2017, the program was finally funded, by the way, with a formal solicitation that was able to guarantee up to $2 billion of loans made by private sector lenders. In 2022, the Inflation Reduction Act gave us the additional power to directly lend to tribal nations. In addition, the IRA increased our budget to lend tenfold from $2 billion to $20 billion. The Tribal Energy Finance Program is being implemented by the Loan Program Office, which is a division of the Department of Energy. At this point, I wanted to provide that historical context and color. Please welcome my distinguished colleague, Lisa Garcia.
There we go. Thank you.
Sorry about that.
And you have me and my dog as well as special guest. Thank you so much for that introduction, David. I really appreciate it. My name is Lisa Garcia. I am a senior consultant and colleague to David Sickey, as well as Monique LaChapa and Paul Deerhouse, rounds out our tribal outreach team. We cover the entire country, letting tribal representatives know about our program, the Tribal Energy Finance Program. Next slide, please. So our program is designed to help tribes invest in energy projects to encourage tribal ownership, encouraging energy independence, energy reliability, which is huge across tribal nations. And it's designed to be a generational investment for tribes, and also to encourage profitability, to design energy projects to be revenue generators for tribes. Next slide. Here's an example, a page with many different types of technology samples of projects that can be done on tribal lands and off tribal lands as well. And our program is unique in that it will fund renewable as well as non-renewable types of energy. So you'll see cogen facilities, district heating and cooling, distributed energy, energy transportation, energy resource extraction, storage facilities, including batteries, and electric generation, transmission, and distribution. Next slide, please. As my colleague David did already state, we were increased tenfold from the IRA distribution, that we now have $20 billion designated in direct loan as well as loan guarantee authority for tribes and tribally owned entities to apply for loans. And here are the 5 must-haves for our program. The borrower needs to be a tribe or a tribal energy development organization, or a TIDO. Our projects can be located on or off tribal lands. The project does need to be financially viable, as in there does need to be a reasonable opportunity of repayment to the federal government, as it is a loan program. The energy project can be used as collateral and the tribe is insulated. And there must be an investment in energy resources, products, and services to be eligible. Next slide, please. Here's a little bit about the Loans Program Office, the LPO. Oh, can you go? Yeah, there, thank you. It is a public policy bank within the U.S. Department of Energy. LPO finances innovative, clean energy, advanced transportation, and tribal energy investments, serving as a bridge to bankability for underserved borrowers, breakthrough projects, and technologies. And as I mentioned, the tribal energy portion of the LPO does fund renewable as well as non-renewable energy projects. Next slide, please. Why invest in energy? An energy project can strengthen tribal sovereignty and revitalize a tribe's economy. And in the time that I've been involved in this program, which is just over 15 months, I've seen a huge uptick in interest from tribes in energy development. Our colleagues, we just attended the Tribal Energy Summit sponsored by the Office of Indian Energy last week, and there was a lot of interest and just a huge uptake in people who had actually registered for the event. So we're seeing tribes are really interested in energy development and energy sovereignty. Tribal infrastructure investment project costs can be reduced through the newly available tax credits, as we're talking about here. This is a land and natural resource investment. It's a strategic energy partner investment, sovereign private equity investments, and tribal utility authority investments. We're also seeing a huge uptake in interest in tribal utility development. Next slide, please. Here's just a little bit about what our program is designed to serve as, the unique value of our tribal energy financing. We provide access to patient capital, which other lenders can't or won't provide. We provide flexible financing, customized for tribal borrowers' needs, and a committed DOE partnership will work with you from pre-application through the loan application process and then for the life of the loan, which is up to 30 years. Next slide, please. And our tribal energy finance team will work with you to help your energy project succeed. Our loans are based on the US Treasury rate plus 3/8 basis points. As we've already stated, we have $20 billion in loan, direct loan, as well as loan guarantee authority exclusively for tribes. Our team understands and respects tribal and program objectives. We have tribal leaders on our team, as well as I have worked myself with several tribes on the ground throughout California. Our team will help you navigate resources across government to promote your success of your program. And our head of our LPO program is Director Jigar Shah, and other team members, as I mentioned earlier, Monique Lachapa, who's a former chairwoman of her tribe, Mr. Sickey, who's here with us, former chairman of his tribe, and Paul Deerhouse, who is a citizen of his tribe as well. Next slide, please. Tax credits for tribes. We're talking about this today. This is a huge new addition to this program. As Ms. Newfeld mentioned, they're intended to serve as a functional grant. Ideally, up to 70% of a project cost can be reimbursed after the project is in operation. I think that's an important thing to remember, that money is not going to be available upfront, but it is a significant benefit through the IRA. And direct payments functionally reduce the overall cost of the energy project for tribal nation owners of the project. Next slide, please. Here's just a really simple outline of our application process. We start with pre-application, and we'll give the link that you can go to for pre-application requests, I believe, on the next slide. And there's no cost for pre-application consultations with our team. Then we move into the actual application, where we have a part 1, which establishes eligibility. And then part 2 digs in more deeply into the viability of the program. And then the underwriting and due diligence process, which digs into the NEPA and legal and regulatory, market and technical aspects of your project, as well as more details on the tribe themselves. And we estimate that this total from start to finish process will take anywhere from 9 months to a year plus. And I will say we're looking forward in the very near future to announcing our first conditional commitment. It will be for a loan guarantee, and we're expecting that very soon. So excited about that. Next slide, please. And just a little bit of information about our loan versus loan guarantee program. As Mr. Sickey mentioned, our program started off as a loan guarantee program. We now are able to offer direct loans to tribes as well as the guarantee part of this. So that's a new feature that we're excited to be able to do. Next slide, please. And finally, let's discuss your project. Up here in the upper left-hand corner is the link for requesting a pre-application consultation that will come to us directly, and we'll reach back out to you to set up an appointment. And you can upload whatever information you have. It doesn't have to be, fully baked. Whatever you have at this moment, we're happy to meet with you and discuss the best path forward. And here's our website, phone number, email, and the same email addresses and names of our team members. We're happy to meet with you to discuss how to fund your potential energy projects. So that's all I have for you today. Thank you so much, everyone.
Well, thank you, Lisa and David. We appreciate that overview very much. I'm going to click out of our PowerPoint presentation here. And now is our time for questions. We are available until 3:30 p.m. So we have plenty of time to address a few questions. Just as a reminder, if you'd like to ask a question, please go ahead and raise your hand and I will unmute you. Questions for DOE, questions for Claire, questions for USET. I think everybody is still digesting.
Or even comments and feedback would be welcome as well. Is that
I
okay,
agree.
Liz?
Absolutely. Any tips? Ooh, we have applause. Thank you, Liz. Your applause too. Telly and Claire, I know that you had perhaps discussed adding some additional direct pay color if we had a little time. Is there anything else that you guys or David and Lisa you'd like to add?
So yeah, I'll jump in. Hi everybody, Telly Meyer. So I think that this is new, and I think that's something to remember. You know, I see the question in the chat looks like that was answered, and that's great. And I think the more we can all help each other up, because we're all trying to figure it out, especially when they drop 180 pages in final regulations a day or two before presentation. You know, I think we're all figuring out. So certainly, you know, ask your questions, and if you know of others that have questions, you know, we just want to make sure the information is out there. I think one of the risks, right, is that Indian country, you know, doesn't. I feel like we're included, right? We're finally included in things, and so it's good to see projects, and I hope that there are projects going on, so that we can show that we are taking advantage as well. So, Claire, anything else?
Yeah, I definitely agree with that. Liz, I hope you see Liz. I think she's trying to unmute and maybe ask a question. But I thank you for mentioning that, Telly. And I also I want to stress that USET is really pushing, as Liz said earlier, for Treasury and the IRS to do more technical assistance and training around implementing these provisions. But we really need to hear those questions from Indian country to help guide what we're advocating for. And you all are the ones who are implementing these provisions on the ground. So even if it's not in this presentation, please feel free to reach out to communicate about the challenges that you're facing, even just to talk about the obstacles. These are really challenging, and as Telly said, new mechanisms that tribal governments may not be familiar with, because up until recently, you know, tribes are tax-exempt entities, and this direct pay tax credit mechanisms are very novel. And so we're all learning together, and we want to learn from you all about how we can improve our outreach, improve our advocacy. So there's no stupid questions. Just wanted to put that out there in case there's some hesitancy. I am learning all of this with everyone else. So just wanted to lay that groundwork, and hopefully we'll get some additional feedback. Thank you.
Thank you
Is
so
it
much,
okay?
Claire. Yes,
Okay to speak?
we unmuted you, Liz. Sorry.
Yeah,
about that.
okay. Now listen, I'm glad you said that about stupid questions because I was going to say, I know I'm not going to ask a real smart question, but I do have an energy background and I've been putting time on this. And a couple of reactions I'm getting in Indian country when I've been speaking on it is cynicism that the government's really going to come through with this money. And it's like, no, they will, you know. So that's one issue is, you know, you think, even though I've been pitching it like this is really unique, you know, great. We've never seen this before. You need to get into the game. You know, there's this thing like, oh, well, we could, but you know, the government won't come through. That's kind of a cynical note. Okay. But now when I was looking at your slides, question I had was on eligibility. And I'm now kind of not clear which slide it was, but my question was, being financially viable. Well, if they need the money to do this type of project, and they're not necessarily, unless they have a partner that's underwriting it initially and all squared away, it's like, how would they meet that financial eligibility criteria? Because I have some groups that are very much interested in getting started, but you know, can't get in the door because they're not wealthy enough. I'm even though there's potential, I was a little unclear about that.
So that sounds like a question for Lisa and David. I'm gonna unmute them.
That's a great question. David, any thoughts on that?
Okay, Liz, well, there's two Liz's. Ms. Walker, thanks for those comments and that feedback. As we're conducting our outreach and engagement in Indian country at large, we are encountering those types of discussions about capacity. As we all know, some tribes are well resourced. Some tribes could use a lending hand, helping hand. So we're encountering varying degrees of internal tribal capacity to be able to conduct the proper due diligence and the research and packaging their projects before they even go seek financing for it. So there's different from what we're hearing and from what we know, there's different discussions around the equity portion of it. For our program, there is a debt equity ratio requirement. And so, for example, what we're hearing is that there may be opportunities for sectors like philanthropy to be able to bring money to the table to assist tribes who are mission aligned and who have the best interests of these tribes at hand as far as tribal economic development and workforce development and so forth. So that's just one example of what we're hearing in Indian country. There are entities out there looking to step forward to assist tribes in lifting their projects off the ground. That one example comes to mind. So there's several others, but I'll be happy to chat with you offline and continue these discussions to your point.
Okay. I won't
May
get
I
into the
ask-
gory. I won't get into the gory details. I mean, I got some, but that was a big
Right.
question of how to get started. I know you were
Right.
saying there's technical
There-
assistance to help tribes, but you know, I'm having trouble, at least through DOE, when I've tried to get into technical assistance. I mean, it kind of goes like this. I get an email to contact, and sometimes when the email person gets back to me, it's not the right person. And you know, it's hard to sometimes get the assistance you need to help analyze the project.
Right.
So-
That's a great point because the enormity of these programs is just extraordinary. We're hearing from tribal leaders around the country the same thoughts and comments that you're having, Ms. Walker. So I'm very glad that you're sharing that insight from your perspective here with this audience. So again, the programs and the amount of money that are coming out of DC are just extraordinarily monumental. And so tribes are taxed to their limits with their staffing. A lot of times in certain cases, we're meeting with tribes that don't have the adequate staff or the time because they're focused on other things that their tribe needs internally to even review our materials. So we're being very helpful in whatever way that we can, to the extent that we can. And also, you bring up another great point, Ms. Walker. Just to be clear, the LPO program is not the Office of Indian Energy Policy and Programs. There's often confusion out there that, oh, wait a minute, okay, you're under Ms. Johns and Deputy Director Conrad. That is not the case. I just want to make that clear because in Indian country, David Conrad gets confused with David Sickey. And so we often have to make that clear. And you know what? I'm glad that you brought that up because it is confusing. It's just the enormity of these programs and the offices and divisions and agencies that are putting on administering Indian programs is enormous. And so I'm glad you're able to share that feedback with us because we're doing everything that we can to make this as user-friendly as possible. And our team at LPO, the Tribal Energy Finance Program, has been working very, very hard to make sure that we make this as efficient and easy as possible because, again, that'll give you ample time to make good, sound decisions based on the information that we provide.
Yeah. I just want to add one thing as you were talking. See, I get the feedback from two sources. One is folks that have worked in Indian country and they have an energy project they want to bring to a tribe. And they don't quite understand what the tribe is going to be qualified for and what, would work. And then there's the tribe that has the project come to them. They don't know how to analyze it, whether they can step into it or not. So it's both sides are confused or not clear, like if this is the right type of project, if it can get funded, so it's not just the tribal lack of capacity, it's then the potential energy developer types that have worked in Indian country before or know something about it. They'd be a likely good partner, but they're not sure, and they don't want to be stepping in and then they find out this is a non-starter, So it's kind of, you want to see those types of projects, the ones that are innovative, clean energy projects that are willing to partner with a tribe or manufacture on the tribal property or something like that. But, we've got some questions on both sides. The other is, I know you're talking about power. I've been approached by a latte that has opportunity to develop concrete manufacturing plant. And this would be from ground up. So it would probably be very energy efficient the way they create this new manufacturing plant, right? But I'm not sure if it falls into these programs. I've been asked to look at that. So it's not like just power. It's not wind,
Right.
solar. It's a manufacturing process that's cleaner or whatever. And how that might qualify. So I'm not saying you have to give me all this technical assistance now, but it's not any one type of project right now. They're in the right location. They're partnering with the right people. You can just feel the opportunity, but I'm not sure if the project's the type that would qualify. So a lot of questions.
So based on my experience and also the experience of our fellow colleagues and team members within the Tribal Energy Finance Program, we do get information from tribes. And sometimes it's not a fit for the Tribal Energy Finance Program, or it will not qualify for our program. So what we're having to do is, and we're happy to do it, is to send you to the other office or division that your program would qualify for. Yeah. So we're doing that a lot in the last year and a half or so. So if you send it on over our way, we'll take a peek at it or have our legal or engineering teams and technical teams look at it. And we'll be happy to say, you know what, this would qualify under the Tribal Energy Finance Program, or it might fall under some other program.
All right. Okay, thanks.
And also on that point, with regard to the concrete manufacturing facility, if I'm not mistaken, there may be other streams of funding through the Inflation Reduction Act that would help augment a clean manufacturing facility. I know that there's a lot of funding for retrofitting existing facilities to move toward cleaner production, but there may be something for newer facilities as well. So I'll look into that for you, Liz.
Okay, thank you.
Miss Walker, may I ask what tribe you're affiliated with?
Well, I work, as Liz Merle knows, with some tribes in the Northeast, like Narragansett up that direction. I've done work out in Montana. This group with the concrete, that's a group that's in Nevada. So I'm kind of around, you know. I know you're focused on the
Right.
eastern region,
Right.
but all these things are popping up, and I'm getting ready to go out to Res. I'll see you, some of you may be out there. And I've been getting questions about this, and I was going to start talking to some of these different offices for the government that have been are out there. Some of these questions, some of these things, you know, it's like trying, a lot of times if it's on the business side, a company trying to connect, one is out of Washington State, is trying to find the right tribal entity that they would partner with, and then giving them advice as a company on, you know, how it might work. And so it's kind of looking at the overall program and then trying to match it up, or it's the tribe that really wants to do it and they're trying to find the right kind of partner and looking at, you know, would they have the financial wherewithal to qualify? So it's kind of, you know, maybe once you get into it, you know, it kind of flows, but when you're at the very beginning and you know, someone's trying to start something, it's really hard to get going in the right direction and not waste a lot of time. And a lot of tribes, I mean, they need the help. They just begging you to help them. But because there's a capacity problem that they can't spend a fortune on somebody like me to do all that legwork. You know, I got to cut to the chase and get to the right people fast, you know, not like take me 5 weeks to do it. So that's the challenge. You know, it's
Right.
some
You'll
tribes are
also hear,
some tribes are well heeled and they can throw the resources at it, but a lot of them that need the development the worst don't have that.
right.
So, anyway.
Those are all valid points that we are hearing and continuing to hear. And I appreciate you sharing that with us because that is very valuable as we go about conducting our work and trying to deploy $20 billion into tribal communities. But my wonderful friend, Ms. Pilar Thomas, who's an energy expert and a former deputy director of the Office of Indian Energy Policy and Programs, just dropped into the chat box. Hi, Ms. Thomas. She's encouraging everyone to drop by at EdRes, the panels on clean energy finance. And I also dropped into the chat box, everyone here, that DOE will have an entire section at Res. So please stop by at our location at 736. And you'll have, that's correct, booth 736. And so we'll have our finance guy there, and we'll also have our other tribal energy team colleagues and members there as well to be able to answer your questions in greater detail. And also we'll set aside a few minutes to talk to you and your colleagues, whoever will be accompanying you to Res. But what we're also finding is that a lot of tribes are not aware of the resources that are available at other offices and divisions, not just at DOE, but other government agencies, that a lot of times tribes don't have to spend a fortune to put together an energy plan, a strategic energy plan.
That's what I hope.
Or there's also modest grants available to be able to help put together those types of strategic plans as well. And I will be happy to send you 2 or 3 areas in addition to some of our program materials that Ms. Minerva will share after the program is concluded today. We'll provide links to our program and also 2 or 3 other resources for those tribes that don't have the capacity or the resources to be able to put together a clear direction of where they want to go as far as energy investments and development are concerned.
Absolutely. And we're happy to send any of those resources out to everybody who registered today. I did notice that we had one other question, although I think I saw the hand go down. Mr. Jacob, did you still have a question?
Sure. First of all, I guess thanks everybody for all this great information. I was looking for some clarification on the rooftop solar. Is that something that's in there or out of there as far as qualifying for some, you know, I'm with Elk Valley Rancheria in Northern California, and they're considering rooftop solar for the tribal homes and businesses. And I wasn't quite sure if that was something that would qualify for this tax credit. I suppose I can get into the frequently asked questions in the 180 pages and all of that.
Yeah, Rob, this is Telly. So solar is included for both residents and businesses, and in fact, you have that little E, so there may even be bonus credits. You know, that little E applies to just solar and wind. So
Okay.
not only is it included, right, the up to 50%, but that you may even get to 60 or 70 depending on your situation. So yeah, probably well worth your time, you know, looking into it. So
Okay, I figured as much, but I was navigating emails as we all do. All this is happening, and I saw that little blurb, and I thought, oh well, maybe that's not in it. But yeah, thank you very much. I appreciate that.
sure, of course.
Any other questions? We might have time for one more before we close.
I have a question, or a question that I've received. Is it true, I guess I'll direct this to Claire and or Telly. Is it true that the tax credits are only eligible for renewable energy projects, not non-renewable? Is that the case?
So, yeah, I'd have to see what you mean by non-renewable, but generally they're focused on renewable energy, wind, solar, you know, carbon
Like natural
capture.
gas, like a natural gas.
You know, I'd have to look at that, Lisa. That one I'd have to look at.
Okay.
So sorry to end it on a I'll have to look back, but
That's okay. Thank you.
It is a good question, though, and something that we should definitely address. Liz, can I make a point that I've been percolating?
By all means.
So, Liz Walker, I really appreciate the feedback that you gave, especially the part about, you know, when tribes get together with energy companies that might not necessarily be native companies, to sort of join forces to develop these energy projects, take advantage of these tax credits and mechanisms that the tribe might be eligible for. There's certainly a lot of confusion on, you know, both sides of those arrangements that happens a lot of the time. But I also want to point out that there's a lot of there's lack of clarity even from IRS and from Treasury. You know, that's this co-ownership gap that was really not cleared up in the final rule. And so it's really good for us to hear that feedback so that going forward, when Treasury and IRS continue to update their guidance, host tribal consultations on these issues, we hope to really encourage these tribes to submit comments, come out to these consultations and provide their feedback, because this is sort of the opportunity for maybe where some of those confusions can get cleared up. And USET will certainly be advocating to make sure that the guidance is clear, it's tribal friendly, and we really have that opportunity to shape that now. So I just wanted to sort of bring that back to the advocacy that the overall goal of the whole tribal infrastructure development program. So thank you for bringing that point to our attention.
Thank you so much, Claire. And that's absolutely right. You know, the co-ownership piece is an issue that is currently up for consultation. We'll be participating on the April 5th consultation and submitting extensive comments. We want to make sure that Treasury and IRS know what Indian country looks like in terms of corporate structures and co-ownership currently, and what will work best for us as we seek to access direct pay. Of course, it's not lost on all of us that we have been awaiting determination from IRS of tribally chartered corporations tax exempt status for about 30 years now. And we are really hoping that the stars align and pushing for a positive, an issuance of positive guidance as a part of this and beyond. So with that, we won't go too over, but I want to thank all of our speakers and presenters today. Your work is really, really important, and we appreciate exploring untrod territory with everyone. I also want to thank everybody who attended. Please, if you haven't already, feel free to register for our mailing list. That's at usetinc.org/infrastructure. That'll give you access to just about everything we do in this space, including our advocacy, but also including resources from all corners of the world as we come upon them. We hope that you have a lovely afternoon. I think it's afternoon pretty much everywhere now, Lisa. And take care and visit with all of us at Res next week. Thank you so much.
Thank you.
Thank you.
Take care, everybody.